Afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, January the 28th, and want to talk about what's been going on in markets here in this past week, where we finished the week last week, and talk about the volatility that we've seen enter into the markets this week and what's really causing that, what's behind it, what's driving it, and is volatility just a negative thing? Does that just mean selling pressure, or does it mean volatility to the upside? So we finished the week last week off of the worst week that the stock market had seen since October 30th, but markets really bounced back last week. The S&P 500 finished the week up 2% even on the week. The small and mid cap indexes were up as well, a little less than the large caps, but are still well ahead year to date, which speaks to the trade that we've been talking about, that the catch-up trade from the small and mid caps to outperform the large caps as we start off the year, as well as we've seen the value trade catch up to the growth trade year to date, where both are now even on the S&P 500. And so we've been talking about that, but it would be remiss if I did not mention the recent stock market volatility that we've seen. So we were off to a good start, and it kind of started. You started seeing some individual names come up and be very volatile and to the upside, and some of those names included the very popular one that everyone's talking about, so I will stick with this one, is GameStop. Starting back this month, retail investors have been piling into GameStop because 140% of the shares are shorted by institutional investors. And so what does that mean? Well, what that means is these institutional investors, oftentimes hedge funds or things along those lines, are betting that the stock itself is going to go down in price. And what has happened is retail investors are going out and searching for stocks that have been heavily shorted and are going out and buying those stocks and pushing the price of those stocks up. And what we call in our business is what's called a short squeeze, where the people who are betting against the stock are getting in a position where they're going to have to buy the stock at a very, very large premium. So for example, one hedge fund has lost $3 billion this week just in a short position in GameStop. So what has happened is you've seen a stock that was trading a month, 2 months ago at $2 a share, hit a high today of $500 a share, and its trading range today, it opened at around $350 a share, jumped up to $500 a share, and is now down to $258 a share. And you're seeing incredible volatility swings in that. And what that did is yesterday, it had other investors spooked. And you saw investors selling the stocks that they've had profits in and the better performers that we've had and seen over the last year, and just kind of pull money out and just sit on the sidelines until this individual volatility sorted itself out. Well, as we kind of have started to see, we had to sell off yesterday, but markets have recovered today, because the other facet of this is we also are in earnings season. This is the busiest week of earnings season this week. And the thing that we're encouraged by is, though earnings aren't quite back to the 2019 levels, the majority of companies are beating Wall Street expectations on their earnings, and not only beating, but beating with a pretty good margin. So getting closer to those 2019 earnings. And that's what markets had already priced in, that we were going to have better than expected earnings this year. That was already priced into the market. So as you're navigating through increased volatility, what's incredibly important to do is remember what your plan and your strategy is. And unless there's something that is fundamentally changed within your strategy from a news standpoint or anything along those lines, where something has become maybe, a very mature business cycle or is being replaced by something else, that hasn't fundamentally changed. It's important that you stick to your plan, you stay disciplined, and stay the course. And if you have questions about how to navigate this volatility that we're seeing right now, feel free to give us a call. We're happy to talk you through what's going on and what's happening in the markets and how it impacts you. You can reach us by phone at 904 346 3460, or as always, visit us online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much for watching.